Private lender IndusInd Bank will be in focus today as we learn from our sources that RBI is closely viewing the derivatives portfolio issue. Let's go across to Ankur for more details.
Yes, sources say that Reserve Bank of India is keeping a close eye on the IndusInd Bank's derivative issue. In fact, we have been told that any action, if at all taken by Reserve Bank, will be after the thorough investigation, the review of the whole matter. The bank is already investigating the matter and an external agency is hired. We have also been told that the matter, the full investigation is likely to be completed within 2 to 3 weeks. But the whole issue of getting only 1 year extension for Sumant Katpalia as MD and CEO is likely to be linked to the matter because the information about the discrepancy was already sent to Reserve Bank before the extension came. In fact, Sumant Katpalia has clearly said that it seems that Reserve Bank is uncomfortable with his leadership and hence 1 year extension came. But other than that, he also mentioned that business as usual will continue for the bank. He doesn't see any problem with that. And what about the next successor of the bank? He clearly mentioned that it can be internal as well as external candidate for the bank.
All right, thanks, Uncle, for getting us all of those important details bright and early this morning. Tell you what, let's move on. Derivative accounting discrepancies in IndusInd Bank may lead to erosion of net worth of up to 2.35%. While the bank expects this to impact its Q4 earnings, let's also go across to Sharad, who's standing by with an update on what the brokerages are then penciling in. Sharad, over to you.
Well, a negative tone coming in for the brokerages. Nuvama, they have downgraded the rating and this is coming to reduce from hold, and even the target price has seen a significant cut from 1115 to only 750. That's more than almost, you could say, 30% cut in the target price. Now, of course, the bank has disclosed a negative post-tax impact of almost 2.35% on the net worth coming from the markdown of these derivatives. Now, these internal trades, they pertain to almost 5 to 7 years of up to 31st March 2024. After that, it has been stopped. Now, these adjustments also include internal forex derivatives adjustment on the bank's borrowings as well. Now, the timeline is discomforting and certain points have been raised by the brokerages. The CFO resigned just before the Q3 earnings. The CEO recently, the CFO actually, you could say, resigned just before the Q3 earnings, and the CEO recently just got 1 year extension instead of 3. Now, they believe that IndusInd Bank's credibility and earnings should be impacted. Even a note, IFL also stated they maintained that, but they have reduced the target price from 970 to 910 rupees per share. They have stated that these discrepancies would be hitting the overall net worth by 2.35%, and the resultant impact will be routed through the PNL and likely to be taken in the fourth quarter of FY25. Now, given that the MFI slippages are likely to further rise sequentially and NIMs are likely to contract further in the fourth quarter as well, they are estimating a 35 basis points of CET1 ratio hit with the pro forma CET1 ratio of 14.8%, but it should not necessitate another round of capital raise. But overall, the tone is bearish when it comes to the brokerages for IndusInd Bank.
All right, thank you so much, Sharad, for getting us all those details.